Hello, cricket fans and aspiring traders. Just like a perfectly timed cover drive, profiting from the stock market requires skill, strategy, and a deep understanding of the game. Today, we're stepping onto the exciting pitch of the stock market, where fortunes are made by riding the waves of market trends. Think of it like this. You wouldn't want to be caught paddling against a tsunami, would you? The same principle applies to trading. By understanding and harnessing the power of trends, you can position yourself for success, even in the face of market volatility. And here's a special surprise for you. I'll be sharing proven strategies and real-time examples specifically tailored for the Indian stock market. Get ready to hit those investment sixes. In the game of cricket, momentum can shift in an instant. One over, a team might be struggling. The next, they're hitting boundaries with ease. The stock market operates similarly. Trends, like a captain's strategic decisions, dictate the overall direction of the market or a specific stock. Understanding these trends is paramount to your success as a trader. Why? Because trading with the trend is like having the wind at your back, propelling you towards your financial goals. Ignore the trend and you risk battling against strong currents, potentially leading to losses. Remember, in the stock market, as in cricket, playing smart is just as important as playing hard. Now, how do we identify these profitable trends before they become obvious to everyone? Just like a skilled batsman anticipates the bowler's delivery, we use technical indicators to get a glimpse into the market's next move. One of my favorite tools is the moving average. Think of it as a team's average score over a series of matches. It helps smooth out short-term fluctuations and reveals the underlying trend. For example, if the 50-day moving average crosses above the 200-day moving average in Reliance Industries, it often signals a bullish trend. The MACD, or Moving Average Convergence Divergence, is another powerful tool. It's like analyzing the run rate of two teams to see who's gaining momentum. When the MACD line crosses above its signal line, it suggests a potential uptrend. Finally, the RSI, or Relative Strength Index, like a batsman's strike rate, tells us if a stock is overbought or oversold. An RSI above 70 might indicate a potential trend reversal. Remember, these are just a few of the many tools available. Experiment and find what works best for you. Once we've identified a promising trend, the next step is to ride it effectively. Imagine a batsman timing the ball perfectly, effortlessly sending it soaring over the boundary. That's the kind of smooth execution we aim for when trend following. One crucial technique is using trailing stops. It's like setting a fielder back on the boundary when a batsman is on a roll, protecting your profits as the trend progresses. For instance, if you've bought Infosys on an uptrend, you might set a trailing stop-loss order at 5% below the stock's recent high. As the stock climbs higher, you adjust your stop-loss accordingly, locking in profits along the way. This way, even if the trend reverses unexpectedly, you're protected from significant losses. Remember, trend following is not about predicting the future. It's about managing risk and maximizing gains within the current market direction. Knowing when to jump off, exiting trends gracefully, and locking in profits. Even the most exciting cricket matches eventually come to an end. Similarly, knowing when to exit a trade is just as crucial as knowing when to enter. Holding on for too long can erode your profits, while exiting too early can leave you feeling like you missed out on a big score. One approach is to use the same technical indicators that helped you identify the trend in the first place. For instance, if the 50-day moving average crosses below the 200-day moving average in HDFC Bank, it might signal a trend reversal. Another effective strategy is setting profit targets. Just like a team aims for a specific total, you can determine your desired profit level before entering a trade. Once your target is reached, it's time to take profits and move on to the next opportunity. Remember, exiting a trade is not about being right or wrong. It's about sticking to your plan and managing your risk effectively. The market's mood swings, adapting your strategies to changing conditions. The stock market, much like the Indian cricket team's performance, can be unpredictable. Just when you think you've figured it out, it throws you a curveball. That's why it's vital to adapt your strategies to changing market conditions. One tool that can help you navigate these shifts is the ADX, or Average Directional Index. Think of it as a measure of the market's mood. A high ADX indicates a strong trend, while a low ADX suggests a ranging market. During strong trends, trend-following strategies, like the ones we discussed earlier, tend to perform well. However, in ranging markets, where prices move sideways, it's often more effective to use mean reversion strategies, buying low and selling high within a defined range. The key is to be flexible, constantly analyzing market conditions and adjusting your approach accordingly. Just like a captain changes the bowling attack based on the batsman and the pitch, you need to adapt your trading strategies to suit the current market environment. Your roadmap to market mastery. Recap of key strategies and special offer. So there you have it, folks. We've covered the importance of understanding market trends, identifying them early, riding them with trailing stops, exiting gracefully, and adapting to changing conditions. Remember, mastering these strategies takes time, practice, and discipline. But here's the good news. I'm offering a special bonus for all you eager learners. For a limited time, get exclusive access to my in-depth stock market course, where I delve deeper into these strategies and more. This course is packed with actionable insights, real-time examples, and proven techniques to help you navigate the Indian stock market like a pro. Join the winner's circle. Unlock your trading potential today. Don't miss out on this incredible opportunity to take your trading to the next level. Subscribe to my channel now and gain access to the special offer, along with regular market updates, trading tips, and exclusive content. Remember, the stock market, like cricket, rewards those who are prepared, adaptable, and always eager to learn. So, gear up, step onto the field, and let's hit those investment sixes together.